Good morning, everyone. I'm going to turn things over to Linda, who will take the requisite legal steps to formally open our governance meetings. Are we on governance?
We're on governance.
Okay, good.
Good morning, everyone. I note that Erica Lewandowski, representing the Director of the Division of Budget, is participating in the meeting via video conference from the New York State Division of Budget Conference Center at the Capitol Building, room 131 in Albany. Erica, can you hear us?
I can, thank you.
Thank you.
Erica, could you raise your hand so I can see who you are? All right, because we're looking at a monitor that has, 4 screens of remote offices and then ourselves, which we really don't need to see. But thank you, Erica. Thanks for joining us. Thank you for your help. Nice to meet you, albeit over TV.
As well.
I will ask for motions and seconds to call to order the September 14th, 2017 Governance Committee meetings of the New York State Finance Agency, the New York State Affordable Housing Corporation, the State of New York Mortgage Agency, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation. May I have motions for HFA and AHC?
So moved.
And seconds?
Second.
Motion for Sunny May?
So moved.
And a second?
Second.
Motions for MBBA and TSFC,
So moved. So moved. We're moved.
and a second. Please note that Mr. Adams is the Governance Committee Chair for HFA, AHC, MBBA, and TSFC. Commissioner Visnakis is Chairperson for Sunny May and will chair the committee meeting for Sunny May. As items are presented to each committee throughout today's meeting, these motions and seconds will be used unless specific items call for a different vote or unless any committee member wishes to record his or her vote differently. For purposes of convenience and to make sure the meetings of the respective agencies go smoothly, items shared by one or more of our agencies will be presented by Agency Chairman Mr. Adams.
So our first item, the minutes for AHC, MBBA, and it's okay if I use the acronyms, right?
Yes.
It goes faster. TSFC committee meetings held on April 13, 2017, and those for HFA and Sunny May held on June 15, 2017 shall be deemed approved, absent corrections from members and directors. Are there any corrections from members and directors? All right. Then, the next item on the agenda is a Sunny May consent item. There will be no discussion on this item unless directors so desire. And this is item 2. It's the Master Services Agreement with M&T Bank and Consultant Services Contract with Doug Dilla. Is that how you say his name? Dilla? Okay. Linda, you're going to explain this?
I'm not going to, it's an
it's a
information
consent.
item, so
Yeah.
consent item, so
We don't need to.
We don't need to,
Good.
and we can answer any questions you have, but if not, we'll just move to the resolution.
All right.
So now before the Sunny May Committee is a resolution of the Governance Committee of the State of New York Mortgage Agency reviewing and approving the continuation of a master servicer contract with M&T Bank and the consultant services contract with Doug Dilla Consulting LLC. Assuming the first and second previously entered for the Sunny May Committee, all in favor, please signify by saying aye.
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 The motion is carried and the resolution adopted.
The next 2 items on the agenda are informational items. There will be no discussion on these items unless committee directors or members so desire. Item 3, arbitrage rebate calculation services contracts with 1, Omnicap, 2, BLX, and 3, Hawkins and their MWBE partners, 4, Joseph Reed, 5, Bryant Rubino, and 6, Hardwick.
And this applies to HFA, AHC, Sunny May, MBBA, and TSFC.
Item 4 is a memorandum of agreement with Natural Heritage. The next item involves the annual review of certain contracts and the approval of a contract for screening services. Item 5, contracts with firms providing professional and temporary staffing consultant services for HFA and Sunny May.
Now before the HFA Committee is a resolution of the Governance Committee of the New York State Housing Finance Agency approving the contract with Global Background Screening Services. Assuming the first and second previously entered for the HFA Committee, all in favor, please signify by saying aye.
Aye. The next item is an informational item. It's item 6. Sunny May Express contracts with Conduit Mortgage Services, Inc., Alice Chin Hua and Chen Bellaviz, and Seller's Guide contract with Ellie May. This is a Sunny May item. The next 4 items involve the approval of certain contracts. Item 7, contracts with Benefit Resource, Employee Benefits, E-Track, etc. Milliman, Post-Employment Benefit Consultant, and ADP, Payroll Processing, HFA, Sunny May, and AHC items.
Now before the HFA, AHC, and Sunny May Committee is a resolution of the Governance Committee of the New York State Housing Finance Agency, the State of New York Mortgage Agency, and New York State Affordable Housing Corporation approving the continuation of contracts with Automatic Data Processing Incorporated, Benefit Resource Incorporated, and Millman Incorporated. Assuming the first and second previously entered for HFA, Sunny May, and AHC, all in favor, please signify by saying aye.
Aye.
The motion is carried and the resolution adopted.
Thank you. Thanks, everyone. Item 8, Custody Services Agreement with Bank of New York and contract for Bloomberg for financial reporting, HFA and Sunny May items.
Now before the HFA and
Bless
Sunny
you.
May committees is a resolution of the governance committees of the New York State Housing Finance Agency and the State of New York Mortgage Agency approving the continuation of contracts with the Bank of New York Mellon for custody services and Bloomberg LLP for financial reporting services. Assuming the first and second previously entered for HFA and none for the HFA and Sunny May committees, all in favor, please signify by saying aye.
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 The motion is carried and resolution adopted.
Thank you. Linda, item 9, approval contracts with SS&C Technologies, Inc. for cash flow services and for Sustainalytics, Inc. for climate bond verification services. An annual review of financial printer contract with ImageMaster, HFA and Sunny May items.
Now before the HFA and Sunny May committees is a resolution of the governance committees of the New York State Housing Finance Agency and the State of New York Mortgage Agency approving the continuation of contracts with SS&C Technologies for cash flow services and with Sustainalytics USA for climate bond verification services. Assuming the first and second previously entered for HFA and the Sunny May committees, all in favor, please signify by saying aye.
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 The motion is carried and the resolution adopted.
Item 10 is insurance consultant services contracts with Insurance Advisors and Sullivan Hernandez, an HFA item.
Now before the HFA committee is a resolution of the Governance Committee of the New York State Housing Finance Agency approving the consultant contracts with Insurance Advisors LLC and Sullivan Hernandez Agency Incorporated and a credit reporting service contract with Experian. Assuming the first and second previously entered for the HFA committee, all in favor, please signify by saying aye.
Aye.
The motion is carried and the resolution adopted.
Thank you, Linda. Item 11, legal services contract with Dentons as portfolio counsel for Mitchell-Lama projects. This is an HFA item. There is no unfinished business. Oh, sorry.
Yep.
I'm reading
You
the
know
I'm
you're
reading the
good.
fine print.
You're good.
Linda, it's going back to you.
Yeah, so, assuming the first and second previously entered for all 5 committees, all in favor of adjourning the meeting, please signify by saying aye.
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 The motions are carried and the meetings are adjourned. The next governance committee meetings are scheduled for December 14th, 2017 at 9 a.m.
Thank you, Linda.
Thank you.
Thanks, everyone.
You ready?
I'm ready. I guess I will begin. We're going to do introductions, I guess, more formally at the main meeting, so I'll skip that part. And I'll then turn things back over to Linda Manley, who will take the requisite legal steps to formally open our meetings.
I will note that Erica Lewandowski is still representing the Director of the Division of Budget and is participating in the meeting via video conference from the New York State Division of Budget Conference at the Capitol Building 131 in Albany.
Erica, thank you again. That's 3 times.
Thank
The
you.
4th time will be a charm.
Right, really. And the 5th.
I will ask for motions and seconds to call to order the September 14, 2017 Audit Committee meetings of the New York State Housing Finance Agency, the New York State Affordable Housing Corporation, the State of New York Mortgage Agency, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation. May I have motions for HFA and AHC?
So moved.
Second.
Motions for Sunny May,
So moved.
and a second.
Second.
Motion for MBBA and TSFC,
So moved.
and a second.
Second.
I think we need Erica then.
Right,
Oh,
Erica,
sorry. Yes, second.
thank you. As items are presented to each committee throughout today's meetings, these motions and seconds will be used unless specific items call for a different vote or unless any committee member or director wishes to record his or her vote differently. Note that Chairman Adams is the agency's chairman and will chair the audit committee for MBVA, TSFC, and Sunny May. Mr. Davidson is the audit committee chair for HFA and AHC and will chair the meetings for HFA and AHC. For purposes of convenience and to make sure the meetings of these respective agencies go smoothly, items shared by one or more agencies will be presented by Mr. Davidson.
Item 1, the following minutes shall be deemed approved, absent corrections from members and directions. Adoption of the minutes of the Audit Committee meetings held on June 15th, 2017, the 65th HFA Committee meeting, the 60th AHC, Sunny May Audit Committee Directors Meeting, the 52nd MBBA, and the 51st TSFC Audit Committee Members Meetings. Any corrections or updates? Okay, we will now move to the action items. Item 2. Resolution recommending the approval of the administrative budget request and financial plans for fiscal year 2018. Sheila.
Good morning. I'm bringing Darrell Johnson, my deputy also.
How are you?
Good morning. We're requesting the approval of 3 items of the audit committee. The approval of the agency's 2018 administrative budget not to exceed $67.777 million for the operating expenses of the 5 agencies. Approval of each agency's financial plan, which shows 2018 and 3 additional years of forecasted revenues and expenses for each agency, and approval of the cash or program budgets for HFA and MBBA, which shows sufficiencies of funds for debt service payments on their bonds. The revenue sources for the administrative budget consist of $40.2 million or 59.4% for HFA, $25.8 million or 38% from Sunny May, and less than 3% from MBBA and TSFC and AHC combined. The budget is an increase of about $1.3 million over the July amended budget of $66.4 million, or 2%, keeping it within the recommended 2% level. The 2018 budget increase doesn't include increase in staffing from the 301 approved in the amended budget in July. The majority of the increase in the budget is the result of higher personal service costs due to the increased staffing for the housing plan. To offset some of these increases, we reduced the discretionary spending by 9%. However, other than personal service costs for auditing and some costs for leasehold improvements added to the increase. The leasehold improvements are due to the fact that the lease here at this building is expiring in 2019, and we had to hire some staff, outside consultants to handle that. Although the single-family unit needs some IT enhancements and software upgrades to track their new systems, new programs, general IT maintenance costs decreased due to the capitalization expenses, which are separate for BAM, our IT improvement project. Discretionary spending constitutes less than 7% of the budget. As for the financial plans, as we did last year with the approval of the Controller's Office, by using accumulated funds available to cover out-year expenses, and in the case of AHC, using HFA funds, we're able to show that no deficits will occur in the out years. For the preliminary and cash budgets, which are required only for HFA and MBBA, these show sufficient funds to pay debt service. And final program budgets will be supplied in January when we do the year-end financials. I want to thank Darrell and the rest of my staff for all their help in putting together this budget, and thank you. Any questions?
Terrific. I guess I'll start.
Sure.
And first of all, say this is great, and it's exciting to see the agency move in the direction, or all of the agencies move in the direction they are. I have a few small questions.
Sure.
Hopefully you can just help clarify a few things for me. And some of my questions have to do with where we are on the amended budget versus the budget request, and then some questions about the actuals projected for 2017 against what we're requesting.
Okay.
So first, on just the summary worksheet, just working off of that. One question about consultants in general. You mentioned the new space. It looked like the last time we looked at actuals 2016 in this, we were at 1.5 million, or am I getting the thousands wrong?
That's right.
No, that's right.
The amended budget was 894, and now we're requesting 9. I just want to make sure, are we requesting enough given the kind of current spend on actuals? That seemed to be a pretty big discrepancy between the last sort of amount we've been spending, and that's, again, separate from the 820,000 we're projecting for the leasehold improvements.
I think we are. We brought it down. We're trying to manage this budget within the 2%. So there are a lot of categories which we had to decrease. This is not one of them, but we brought it down from 1.5. So it's going to be tight, but in the interest of trying to stay within the 2% that's required, we had to reduce a lot of the expense categories to facilitate the increase in salaries.
Okay.
And that happens in a lot of the categories.
Yeah, okay. And then just on again, the actuals against the budget, and this is just HFA specific. So looking at the HFA 2017 projected, the total is just under 59 million. And of that, personal services is about 32 million, again, in actuals, and we're requesting 38 million. And I guess my question is, do we anticipate, I mean, as you know, I've been a strong supporter of staffing up, and,
Right.
you know, obviously we have a lot of work coming to the agency, but I guess the question is just, is that differential realistic? Are we going to staff up that quickly over the course of the next year? That's a pretty significant difference between the actuals and the projected request.
Well, we have 35 slots and we have candidates for all 35. So and probably need some more.
Okay.
So, you know.
That's terrific to hear.
Yeah, so I think we are going to staff up rather quickly depending on the approval process of the staff.
And sorry.
Yeah, Sheila, just, so you said the combined staff of the 5 entities is about 300 people?
Ultimately will
Ultimately,
be.
right, I'm just big in rough numbers.
Mhm.
And there are how many vacancies currently?
We have asked in July, we asked for 35 new slots,
Oh, new line, these would be new lines.
included in the 301, though. The 301 is the total,
Well, that's,
including
the
the
301 is
35.
aspirational. The 301 is.
Yes.
Yeah, with.
Yeah,
the
part of-
new
Yes.
that-
If you know,
Yes.
when we started the housing plan sort of process, we laid out a 2-year plan to sort of staff up, knowing we didn't need everybody year one, and
Right,
we need sort
I
of different
see.
functions.
So
at
you're
different
going
times,
to
so-
that with the 35 new.
Yes.
And then my other question was, and you can get back to me if you don't have it at your finger, but just in an agency of this size or combined organizations of this size moving to 300, there's always some turnover and there are always some vacancies, and that always produces some savings, obviously. And I just wonder what the average percentage rate of vacancies is, you know, or ballpark number of unfilled positions.
We're very, very close to fill right now.
Yeah.
You're very close to
We're not
fill.
close to 300 because we just did the 35 in July, so as Sheila said, we have to staff up to get there.
Right.
But and we gave you the precise number, but we're within 15%.
Yeah, right, okay.
Yeah.
Thank you.
It's tight.
Right.
It's great we're
I mean,
hiring.
No,
it's
but you-
constantly changing because there's obviously attrition constantly, but.
Right, but it's not enough to lead me to ask the question I was going to ask, which is systems for vacancy control, right? In bigger agencies with thousands of people, there's always right?
Right.
And vacancy control is a form of, you know, both cash flow and expense management. I mean, it's important to manage that very carefully. And also, it's hard to obviously to make a case for new lines if you have a high level of unfilled positions,
Right.
right, in the
And our
broader realm.
attrition, oh, I'm sorry.
Please.
Hi, this is Diana in Albany. I apologize. Our attrition rate on the HFA Stony May side tends to be about 1 per pay period. So we do employ the managing vacancies very stringently on the state side. We don't see as much attrition on the Stony May HFA payrolls, but we do monitor that very closely.
Thank you. I'm sorry, what's your name?
Hi, I'm Diana Nebbiolo, and I oversee admin and finance for the agency. So Sheila and Daryl are part of my team. I'm just here in Albany. I also oversee HR.
Great. Diana, thank you very much. It's very helpful, and thanks for introducing yourself.
And one last question, and then we'll hand it over for other questions. This is on the new the HFA budget plan when it goes through 2021. And it seems like when we look at the revenue, when we look at the expenses, it's a fairly conservative take. We, in the narrative, say that it assumes gradual growth. Obviously, we're moving quickly with the new plan. I was just a little struck by what appeared sort of almost like level, 89.9 all the way through. If you go to 2021, 89.9. And in present dollars, that means we may even be shrinking a little bit. I'm just wondering if you want to reflect a little on sort of the long-term trajectory, and whether it's sort of a one-time bump up and then we have a steady state, or whether we should be actually planning for more growth, because this seems to be the plan and not even for sort of normal growth. It seems almost to assume a steady state for 4 years.
This does not, it excludes all of our conduit debt activity.
Okay.
So that takes out a lot of our core business. So that's why it's as level as it is.
But this is still the operations, or am I wrong about that?
No, it's operations, but if most of our revenues come from the debt side.
Right, I mean, this is sort of revenue and, this is revenue and expenditure,
Yes.
so it balances. So are we anticipating, again, do we have a sufficient plan for continuing to staff up for continued growth? And maybe the 35 we're looking at is the right level, and then by the end of year 2, we're fine. But I'm just curious, it seems like things are expanding.
My sense is we'll get 2/3 through the year with the 35 and either feel like we are in a good spot, or we'll sort of notice like we're 10 heads short, and sort of strategically where they might be. And I mean, I think because when you're growing, I think sometimes it's hard to know sort of when you level out a little. So it's a fair question. I'm not sure we know the answer, but yet given last year and this year's expansion, I think we need to let some of it sort of absorb.
Okay.
And that's to your point, I would just add that, as an accountant, we take a conservative approach. So we'd rather put in, less revenues and not overstate what
Sure.
our expectations are. So.
And I guess my concern, I mean, I think that's wonderful, and that's exactly the right approach. As a board member, my concern is just making sure we have the capacity to meet the demand, because a lot is being asked of HFA,
Right.
which is terrific, and we're stepping up, but I want to make sure that we support you in making sure we meet those demands.
Well, the 2% limit on the budget is very restrictive, so.
Nestor, can I, question?
Sure.
A question of Diana, because it sounds like you're, in charge of HR. It looks like benefits and fringe is almost 50% of compensation, right? Do you have what's the average? What's the rate? Is
Actually,
it close to that?
it's in the neighborhood of 50%. DOB sets the rates for us. Erica might know specifically. It's in
Yeah, I
that
don't have the
neighborhood,
numbers
right?
off the top of my head, but that's approximately correct.
And is that? I mean, again, just in terms of trends, I'm going to imagine, for a whole list of reasons we're familiar with, that as a percentage has really gone up over the years, hasn't it?
It has.
It has.
And
Big
we
time.
view
I
that
mean-
as almost a fixed cost
Yeah.
of doing business that we, right.
For what it's worth, since I work in the city system, I'm part of CUNY. We're at like 51%, and the problem obviously is that if you roll that in and just think about payroll costs, it limits. Obviously, if you weren't paying 51%, you'd be hiring more people
Right.
with the same amount of money, right?
Exactly.
So other questions? Joyce?
I had a question about the Sunny May projections. The the decrease under operating revenues for rental and financing income between 2016 and proposed 2021 shows a substantial decrease there, and I'm just wondering why.
Actual, you're looking at actual to this year estimate?
Which one?
Looking at last year's actuals versus the proposed 2021. And I see that the current year is actually lower than the last year's actual also.
But
why are we
but
seeing-
2021
Why are we
is,
seeing a decrease there is basically the question.
for this year's estimate, you mean,
From what, yeah,
from last year.
from last year and, yeah, from this year.
It's based on the allocation of work by the staff. So we have hired more people that are doing more work on the HFA side, so I think that's the result, that's showing that result.
So you're
there-
seeing less on the Sunny May side?
Right,
Is that what
right.
it
So
is?
people are allocating more of their time to the HFA side.
Okay.
But Joyce, it's also a function of the interest our expectations in terms of interest on the mortgage loans. And that's pitted against what the bonds are, the interest payable on the bonds. We could probably go a little deeper and get you a little bit more detail on why that's trending down. But I think it's a function of how many mortgages we have outstanding versus the amount of bonds that we have to service, the bond service.
Again, overall expenses are going up, right, by almost about 2%.
Right.
Any
Well,
other-
except the non-operating expenses are going down. I'm sorry, they're going up also,
Oh.
I take it back, I was looking at the wrong number. It's total expenditures that are going down, but that, I guess, goes back to that same issue.
Other questions?
Mr. Chairman, I'm here in Buffalo, Mark Schroeder.
Mark?
I just have two brief questions stemming from first the admin budget and the financial plan. So the staffing up is one thing, and developing bench strength certainly is important with those 35 new positions. But in terms of the ratio of compared to hiring consultants at the same time, is there a ratio, or how does that work? And what is the need for the consultants if we're bulking up on the new positions?
Well, we're hiring some consultants mainly for IT purposes. Our consultants are looking at the Sunny May programs, new programs that we have in place, and also the IT consultants for the new IT system. So that's where our consultants are placed.
Within the 35 new positions that are coming, are there IT positions in there that would reduce consultants?
That
No,
Diana
none
would
are
have to
contemplated
answer.
at this time. No, there are no IT positions within the 35 that are contemplated at this time. The majority of those 35 that we brought to the board a couple months ago are related to the work efforts that are needed to implement the governor's housing plan and develop the new units across the state, underwriters and jobs of that nature. The IT positions that Sheila spoke about are temporary consultants. They are time limited in nature, obviously, and they come in to do very specific tasks for the agency with very unique skill sets. Geared towards getting our business application modernization, our BAM multi-year, multi-million-dollar IT project kind of off the ground and working.
Okay,
that help?
thank you. Thank you very much for that explanation. I appreciate that. The second question comes from cash debt service. So are we accounting for debt in a 4-year plan, or was it just 2018 that you were referring to?
I'm sorry, what column are you looking at, or what plan are you
So,
looking at?
when you were talking about, in the beginning, you identified the 3 areas you were going to speak on: admin, budget, the financial plan, and then finally cash debt service. And so
Cash
I'm
program
assuming
budget.
that the debt service, what's that?
It was the cash or program budgets that show that there are sufficient revenues to pay the debt service for MBBA and HFA.
In a 4-year, in not only 2018, but the out years as well. It's projected what that is?
No, that's just for this current year. That's a separate document that was appended with a link, and it just shows the coverage of debt service.
Okay, all right, thank you.
Thank you. Great, thank you.
So now before all 5 committees is a resolution of the Audit Committee for the State of New York Housing Finance Agency, the State of New York Mortgage Agency, the State of New York Affordable Housing Corporation, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporations adopting an administrative budget for the fiscal year November 1, 2017 to October 31st, 2018, and financial plans for the fiscal years 2018, 2019, 2020, and 2021 with respect to the State of New York Housing Finance Agency, the State of New York Mortgage Agency, the State of New York Municipal Bond Bank Agency, and the Tobacco Settlement Financing Corporation, and the State of New York Affordable Housing Corporation's administrative budget for the fiscal year April 1, 2018 to March 31st, 2019, and the fiscal plan for fiscal years 2019, 2020, 2021, and 2022, and the preliminary cash budgets for the State of New York Housing Finance Agency and the State of New York Municipal Bond Bank Agency for fiscal year 2019 and I believe 2020. I think I'm missing a page. Assuming the first and second previously entered for all 5 committees, all in favor, please signify by saying aye.
Aye.
The motions are carried and the resolution adopted.
Thank you.
I'm good at that.
Thank you. We'll now move to item 3, reviewing the servicer audit report of M&T Bank. Steve?
Item number 3 is the servicer audit of M&T Bank. Here we looked at the mortgage records and the systems of internal control for the Sunny Mae single-family mortgages serviced by M&T Bank as of 3/31/2017. As of the audit date, they were servicing approximately $1.9 billion in loans. M&T Bank is a subsidiary of M&T Corp., who had approximately $123 billion in assets as of 12/31/2016. They're a full-service mortgage group. They deal with acquisitions, originations, loss mitigations, foreclosures, REOs, and servicing of residential and commercial property. They are participating in all of the agency's bond indenture programs, and payments can be made at any of their branches or a lockbox operation, and their deposits are FDIC insured. The result of our audit was that we were able to satisfactorily achieve our audit objectives. We had no items or recommendations in the report. Items of an immaterial nature were discussed with servicer management resolved, so that management did not have to respond to this report. So we're just going to ask you to accept the report in this situation.
Sure. Questions, comments, Joyce?
Oh, actually, yeah, I just have a question about the Sunny Mae loan servicing
Yes.
and the documentation thereof. And could perhaps you just explain a little bit about how that audit is performed to ensure that the documents are in fact there?
Sure.
That having been a problem, as you know, in the past
Right.
with other banks.
Originally, we do our prep work in-house. And, locate the documents that we have internally so that we're prepared when we get on site. When we're there, we have discussions with management. They provide us with generally videos of the documents that we go through and make sure that all legal action is properly taken in a case of impaired loans or whatever policies and procedures we have, they're in compliance with. And therefore, we can judge based upon that whether they're doing the job correctly.
You also look at a sample of the loan documents to make sure that they are in fact there?
Yes, yes, and we do that not only on regular loans, but as I mentioned, any impaired loans. So any loans that are in the process of foreclosure, delinquent loans. And also we look at the real estate owned, we call them OREs, they call them REOs, just to make sure that they're not only filing the insurance claims, but also to make sure that they're marketing the property on a timely basis, and also that they remit any funds to us on a timely basis as well.
And we also review the foreclosure proceedings to ensure that that borrowers are being treated fairly, shall we say?
Well, yes, in today's world, it generally takes a number of years to foreclose on it.
Right, I know.
But there are mandatory conferences that we have to attend. Not only M&T, who in this case would represent us, but attorneys as well. And they go, and they deal with the referee and the borrower and his or her attorneys, and they try to resolve it in the terms of either a loan modification or some sort of process like that.
Question, is it, in the foreclosure process, is there ever any consideration given to converting the homeowner into a tenant and then foreclose, accepting a deed in lieu of foreclosure and then marketing the property with a tenancy?
We can accept a deed in lieu. We have to require, or it's required that we get the pool insurer's approval as well. It can happen, yes.
That would seem to me to be a preferred course of action if it can work out, so you don't displace people.
You'd be surprised, a lot of people just tend to walk away.
Right.
Interesting.
Can I just make a point that on Sunny Mae, this is Sunny Mae's main servicer, the master servicer. The fact that they're servicing 1.9 billion and they're getting this kind of audit from Steve, clean audit, this is a great sign for Sunny Mae.
Yeah, in fact, I believe you approved the master agreement in the governance committee.
And they're doing 1.9 billion of our loans.
Steve, how long have we worked with M&T?
It's been a number of years. I don't know exactly, but I would say more than a dozen years. Alex, do you know that?
Well, it's almost 25 years.
Yeah,
They're our master servicer, and they're terrific.
Yeah, I seem to recall back when I was at the state controller's office, they were also the,
Yeah. And
Go ahead, no, I'm sorry, finish.
no, sorry.
I was saying in a time where a lot of these commercial banks are getting out of the servicing business, M&T is picking up the slack in this case through the agreement we have.
just curious, do we know what the servicing, what is their servicing fee like?
That's the
I'm
that's
just
the wrinkle
curious.
that we don't pay them.
We don't pay
They
them.
get under the Sunny Mae statute,
Yeah,
Sunny Mae doesn't pay for its servicing, the banks get a credit against their state franchise taxes. So they.
Nice work if we can get it.
Yes. We'll go into that.
They're one of the few banks that can use the credit card.
Yeah, they can. Use it.
That's interesting.
and in general, we should be glad we're not Florida, because next year the answers to these questions might be very different.
Yeah.
Yeah, Steve, I mean, it just should be remembered, I think, noted that, M&T as a regional bank that last I checked had about $80 billion in deposits, probably north of that now, is just one of the great business stories of Buffalo. And the fact that, as state agencies, that we have such a great, Buffalo-based bank with leadership that many of us in this room know, doing this work for so many years is worth noting. It's,
Yes.
keeping the business in the state for many, many years, and it sounds like a good relationship.
Yes.
Mr. Chairman, I just have a brief question. Who performed the audit?
I did.
In case you didn't hear, Steve chose to
And-
be our
I did.
internal auditor.
This is internal, yeah.
It's internal.
Internal audit.
This is internal.
It was an
audit.
internal audit? Okay, all right, thank you.
It's the staff.
Thank you. Other questions, comments? Thank you.
Then now before the Sunny May Committee is a resolution of the Audit Committee of the State of New York Mortgage Agency reviewing and approving the servicer audit for M&T Bank, assuming the first and second previously entered for the Sunny May. All in favor, please signify by saying aye.
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 Move on to item 4, the approval of the internal audit procurement audit report.
Yes, here we looked at the accounting records and system of internal controls for the agency's procurement function as of 10/31/16. The contract and administrative group is responsible for the procurement of contracts for personal services, while the telecommunications facility group procures purchase orders for non-personal services. For contracts up to $1,000, we do a cost analysis for the best price. For $1,000 to $50,000, we get 3 written bids that we review and analyze. And then for $50,000 and above, we do a competitive bid process, which could be an RFP, which always gets included in the New York State Contract Reporter for publication. For contracts of $25,000 or more, we have to comply with the MWBE rules. And for contracts of $15,000 or more, we have the lobbying rules, of course, as well. Any contracts over a year or over $100,000 have to come to the board for approval. They also approve the annual procurement report, which is placed on the Paris site. Our audit included a review of the policies and procedures. We looked at contracts, purchase orders, accounting transactions, documentation, and internal controls. Here we were also able to get a satisfactory result. We had one recommendation, which management has responded to, and we're going to ask you to accept the report and a response to the situation.
Questions, comments? Thank you.
Then now before all 5 committees is a resolution of the Audit Committees of the State of New York Housing Finance Agency, the State of New York Affordable Housing Corporation, the State of New York Municipal Bond Bank Agency, the Tobacco Settlement Financing Corporation, and the State of New York Mortgage Agency are reviewing and approving the internal audit procurement audit report, assuming the first and second previously entered for all 5 committees. All in favor, please signify by saying aye.
Aye.
Motion is carried and the resolution adopted.
The next item on the agenda is an information item, and that will be a presentation from the independent auditor. Welcome.
Good morning.
Morning.
We're joined by Louis Roberts, the partner from Ernst & Young.
Good morning,
who will be
everyone.
Conducting our audits of the agencies, and Lou will be presenting the audit plan for the upcoming audits.
Great, thank you, everyone. Great to be here with you this morning. If I could turn your attention to page 3 of the audit plan, which might be slide 4 if you're looking at it on a PDF. I just want to summarize our services for the year and the various opinions that we'll be issuing. Consistent with prior year, we'll be issuing opinion on the financial statements for HFA, Sunny May, MBBA, Tobacco, and AHC. AHC has a March 31 fiscal year end. We will also perform audits in accordance with the uniform guidance over the various grant programs for HFA and Sunny May. In conjunction with these audits, we'll report on the internal control over financial reporting in accordance with government auditing standards. And to the extent that we have any areas to identify recommendations or identify material weaknesses, we'll be issuing separate reports to the extent that we have any items to report. In addition to the core financial statement audits and the grant audits, we also provide agreed upon procedures for the submission of certain data to HUD. We also, in accordance with the Public Authorities Accountability Act, issue separate reports for each of the agencies entitled Investment Guidelines for Public Authorities And we also, in accordance with the submission to HUD, we issue an additional report that includes the financial data schedules for the HFA financial statements. So all of our services are consistent with the prior year. If I could turn your attention to the next page, just highlights our audit timetable. So in September and October, we perform our planning and risk identification, and the audit's kind of broken out into 4 different phases: planning and risk identification, strategy and risk assessment, the execution of the audit procedures, and the conclusion and reporting. So we will be performing our interim procedures, that was we typically refer to them for the planning and the strategy, from September through October, and then come back out in November through January to execute all of the audit procedures and be back here within 90 days of year end to report to you on our results of the procedures and issue our audit opinion. And then we come back in May, June for also the single audits and AHC. Areas excuse me, of audit emphasis are on the next 2 pages. I'm not going to go through these in detail, but the foundation of our audit is the assessment of the internal control environment. And on the right side, we list out the significant processes that drive the significant accounts that you would see on the balance sheet and the income statement. So that we're going to perform those procedures the October timeframe. So some of the significant accounts that we look at, this is not all inclusive, but just to highlight some of the areas. Cash and investments, we confirm cash and investments. We ensure that investments are properly valued. And also, to the extent that there are restrictions on a cash, we want to make sure that they're reported as restricted investments and assets. Accounts receivable and allowances, we confirm a selection of mortgage receivables on a statistical basis. And we also look at the agency's policies and calculations for establishing the allowance for loan losses. On the next page, the OPEB, which is the other post-employment retirement benefits. Typically, we receive a report from the agency's actuary and then perform a review over their assumptions and look at the data that goes into that calculation. This year is a roll forward period, so you're required to have the actuary perform the actuarial evaluation is report every 2 years. So this is an off year, so we're just taking a look at that roll forward procedure for this year. Again, I think I mentioned we review the methodology for the reserve for claim losses. We confirm all of your outstanding debt. We take a look at the interest rate swaps to make sure that they are in fact effective hedges, which would allow them to be report the change of the fair value on the balance sheet as opposed to running it through your income statement. And we have a separate valuation group that looks at the valuation of those instruments. With respect to operating revenue and expenses, we look at controls, we test controls, and then we also take a sample to select significant transactions or transactions that might appear to be unusual. Any questions with respect to areas of audit emphasis? Okay. Next, page 7. Just want to highlight the fact that throughout the course of the audit, from planning through conclusion, we evaluate the risks of fraud. We meet with management to obtain an understanding of their views of the risks. We take a look at whether or not there was actually any fraud committed or alleged fraud, and evaluate how the audit committee and management exercise oversight of the agencies. Page 9 is a summary of our required communications. Today we're here to review our planned scope and the timing of the audit, so we communicate that on an annual basis. The rest of the items are typically presented at the conclusion, but I do want to highlight, that's why we have 2 columns, to the extent that we had any significant issues that we come across in conducting the audit, any independence matters, material weaknesses, disagreements with management, we would reach out, have a conversation with management, and then reach out to the audit committee before we conclude the audit. The next few pages are pretty much takeaways, just highlighting some new GASB pronouncements that have been issued. I think we've been talking about GASB 75, which will be a change in the recording of your OPEB valuation. That will impact the agency's fiscal 18 financial statements, so it's not effective for this year. The rest of these do not have any impact on the agencies. The last one, which came out recently, has to do with leases. You may know, in the corporate world, the FASB came out with new guidance on leases. GASB came in behind and also has some revisions as it relates to the accounting for leases, but that is down the road, so it'll impact you for fiscal year 21. And then lastly, we have a copy of our peer review report, which we've included in prior presentations. That concludes my presentation. Be happy to address any questions.
Please.
I have, at a high level, and I know we're pressed for time, but thank you very much. I'm curious just to learn a little more about this new requirement for reporting on the OPEB. And one can see why, that it's important. But what do you, if you haven't done this before, or we haven't as an agency, and I suppose that spreads throughout state government, if it's a new requirement for agencies, what do you expect, if any, to be the effect of that? For example, one could fear that if now on our financial statement we fully disclose, I'm making this up, so whoever's taking it, don't use the example too seriously, but if, you know, if an agency is somehow now responsible for pension liabilities, and it wasn't before, do you have a new exposure that affects your credit rating, for example? I mean, sort of big picture, what kind of impact could this have?
Right. Well, I guess the good thing is, with respect to pensions, the agency went through the similar GASB implementation last year or 2 years ago with respect to pensions. So now it's the other post-employment benefits, healthcare.
Right.
So they wanted to phase it in, not have it all come in at once. So there was no negative impact from the rating agencies when they saw the net pension liability recorded. So and every government has to go through it.
You said it. I was
right. Every government has to go through it.
And transparency is a good thing. Got that? Yeah. But okay, so you've done the pension liability. You still this year will see the effect of, for example, healthcare and other post-employment benefits.
Next year.
Next year. Sorry.
Next year. Fiscal 18.
Okay. Well, we'll have to keep an eye on that.
Absolutely. Just 50%. Great. Other questions?
And it's not being picked up.
Anyone remotely? Great. Well, thank you very much, and good to
Thank
see
you
you
all.
again, and we'll see you at the next one.
Thank you.
Great. The next two items on the agenda are information items. There will be no discussion on these items unless committee directors or members so desire. Item 6, the financial statement update for the second and third quarter of fiscal 2017 and the first quarter for 2018 for AHC. Questions, comments? Great. Item 7, report of the administrative budget expenditures for the 9-month period ending July 31st, 2017, and the 6-month period ending April 30th, 2017, and updated financial plans. There being no unfinished business, I will ask for motions and seconds to adjourn each of the 5 agencies, members, and directors committee meetings.
So moved.
So moved. Second.
Assuming the first and second previously entered for all 5 committees, all in favor, please signify by saying aye.
Aye.
The motions are carried, the meetings are adjourned. The next audit committee meetings are scheduled to meet on, the next audit committee meetings are scheduled for December 14th, 2017 at 9 a.m.